really excited for this panel because I think it's really emblematic of the explosive growth in cryptocurrencies and the melding with traditional finance. And so we have excellent panelists. As you can see, they're fantastic dinner partners as well. So thank you so much for joining us today. And we're just talking about the new financial system and how we can build out, first of all, usage, banking, lending, and then the use of stable coins. Obviously, regulation is a big topic as well. So I always get asked by people, our viewers always ask me, when I buy my Bitcoin, I buy my cryptocurrencies, what do I do with it now? So we have the guy that builds out the pipes there in Cascarilla and Paxos. We have one of the best, in fact, the largest Bahamian private bank right here, Odetta Morton, a representative there. And then the guy that somehow got the first federally national banking charter, I believe, by any cryptocurrency bank at Anchorage Digital. So Diogo, Mónica is very interesting, and then you'll tell us your secrets on how to get the regulators on side as well. And then this guy who's fantastic at dinner, Michael Moro, Genesis Global Trading, $100 billion, right? In trading last year, $14 billion in loan portfolio. You had a fan there in the front row. Is that an employee, a staff member, friend?
No, not at all. It's planned.
Did you pay him?
I will later.
Okay. So why don't we just talk about the state of the industry and just do a broad overview to start off? Because obviously everyone's talking about the pricing and we're in this uncertain world, whether it's the markets or global macroeconomic issues or war in Ukraine. So Charles, why don't I start with you and what you're seeing right now in the industry? Do you feel that clients are pulling back?
I mean, I think it's a very uncertain time because we have a couple of things that are happening. One is we're going through an interest rate cycle like we maybe haven't seen in 30 or 40 years. 50, maybe 75 basis point hike. I don't think that's happened since 1994 or something. And clearly the crypto community wasn't around then. So that's affecting asset prices in general. It's certainly affecting the crypto community. And then you have obviously the war in Ukraine, which is creating a lot of uncertainty. And so there's just the general headwinds that are happening from a macro perspective. But on the other hand, I think if you look underneath the hood and said you really tried to understand what was happening from a fundamental perspective, which is probably really the only way you can really, I think, have a planning cycle or a conviction, it's really very, very positive. The fundamentals in terms of the number of mainstream institutions, the number of users, and the community growth is continuing to improve. And that's what I really look at the end of the day. The price can always be misleading. Things go up, they go down, they go through cycles. I've lived through so many Bitcoin winters and crypto winters that I know that you have to make sure that you think not about what's going to happen in the next 2 months or 3 months or even 1 or 2 years. What's the long-term trend? And I think the long-term trend has never been more positive.
Odetta, what do you think? Long-term trend positive?
Yeah, I totally agree. I mean, coming from a banking perspective, what I would say is, I think that long-term banks also need to understand their needs of their customers, right? And how to service them because, they need to understand and appreciate that there's value in harnessing the data that relates to their customers and to have, more intuitive experiences with their customers. And so I definitely think that, long-term there's a positive impact there. But also, in being able to harness the data, I also think that banks need to understand that technology is evolving and everything is moving at lightning speed today, right?
Yeah, and thank you so much for hosting us because I think Deltec Bank is the reason why we're all here, why FTX is based in the Bahamas. So thank you so much.
Yeah. No, at Deltec, we really, what we're trying to build is a 24/7, 365 platform for our customers because we appreciate that, technology has evolved in the way it has. And obviously, we want to integrate crypto in that experience as well.
Yeah. Diogo, what are you seeing?
I think overall it's very easy to be uneasy about macro, but I've never been more excited about micro. And I think this conference is a great example of that. The people that you have here, the quality of the things that are being built. The interesting thing is all of us here have been through several bear markets of crypto, and the same pattern has always been true, which is there is a lot of excitement built. There are developers, engineers, business people that come into this space, and then that never decreases. It actually ends up being a strictly increasing monotonic function of people coming into the space and never leaving. And we're also seeing that. The institutions that weren't really here in 2017 are not pausing their integrations, their projects, the really cool things that they're building in the space. They're continuing with it, even if the macro outlook is not the greatest. And so that's what we're seeing at Anchorage. We're allowing these institutions to build products in a regulated way, and they're actually coming up with great ideas about what to build using crypto, and that's not stopping anytime soon.
And what about $100 billion in trades last year? Are you still on pace for that this year, despite the pullback in pricing, Michael?
So I do think that trading volumes, I think across the board, are going to be down, certainly in the first quarter of this year compared to what we saw last year. At the same time, what has happened, I think, kind of in crypto is, we get this massive bull market, whether that's in 2017 or the one we saw last year. And I think arguably you kind of get to a point where the pricing and kind of the market valuation of different coins runs ahead of like the fundamental value of the space. And then you get this period where things kind of trade sideways to down, but that's when like the book value, the fundamental value of crypto is catching up. Right? And you get to a point where that right size of the price versus the fundamentals within the space, and then you get kind of next bull market to come kind of following. So I think we're in that stage right now where kind of the builders and kind of the entrepreneurs in the space are continuing to build on what we've been working on to allow for kind of that next bull run. So personally, I've never been more bullish on Bitcoin. But it's also one of these times where I tell everybody, stop looking at the price every day, because it's probably not the best thing for your health. But no one ever listens to me. They kind of still do it because they find it, incredibly interesting.
You realize this is an FTX event that's hosting this, so that's where most people look at their pricing every day, every hour.
I'll interject and say, what we see publicly, of course, are the volumes, but what you don't see is, for example, we had our best quarter ever in terms of number of institutions onboarding onto our platforms. You don't get to see that because none of that is public. You get to see the effect of that. And of course, if the price is depressed, obviously you have to trade twice as much to actually have the same volume if the price is half. But you don't see the institutions coming, you don't see the implementations, you don't see the real use cases actually being built because none of that is actually public for any of our companies.
Yeah, well, Charles, you can talk to that because you work with PayPal and Venmo. I mean, is demand, it's not necessarily going down, right? I imagine the buildup is actually accelerating.
Yeah, I mean, for us, we have 650 million end users through partnerships that are powered off our infrastructure. That's a really big number. The penetration rate of those users is obviously smaller, but if I look at what happened this year, we might add 350 million more end users, maybe even more than that. We could have over 1 billion end users powered through partnerships. That's a really big number. That tells you how much accessibility is now starting to come into the mainstream. And I'm quite confident even next year it'll be even more than that. You're talking about billions of people, and there's only about 150 million wallets maybe or something like that in the space. So there's a huge possibility here for there to be a mainstream adoption curve that radically changes how this affects people's lives, and that'll get reflected in the price. It might not get reflected today, it might not get reflected tomorrow, but it's going to get reflected, and it's not going to get reflected evenly. Some assets are going to go up, some are going to go down. That's the whole idea here. But I think in general, if you just step back and said there's, I don't know, $1.5 or $2 trillion of market cap in the space, what is that going to look like in 5 years? I mean, that's definitely going to be 5 or 10x. For sure, and that's the important thing. That's what it's really, the underlying trends are showing.
Yeah, so Odetta, you come from a mainstream banking background, and given that this panel is talking about the new financial system, I don't want to name names, but I think you've heard certain banking CEOs, certain banking executives, I would say they're skeptical on cryptocurrency.
Yeah, I think publicly they have been quite skeptical, right? I think that we've seen all of the big banks hesitate as it relates to cryptocurrencies, but definitely behind the scenes we've seen, key talent acquisitions of persons with crypto experience. We've seen that, huge investments are being made. So I think that, while publicly there has been a lot of skepticism, behind the scenes there's been a ton of investments, and I think mass adoption is inevitable.
But isn't that because the clients demand it? I mean, they can be outwardly and publicly skeptical, maybe even bearish on cryptocurrencies, but if your client wants it and driving the demand, you have to give the clients what they want.
Yeah, I mean, it's a tough balance at times, especially as a regulated financial institution, right? You want to be able to to give good service to your customers, but at the same time, you have to operate in a regulatory framework, right? And so I think that's one of the great things about doing business here in the Bahamas, right? We have regulators that are progressive, very forward-thinking, and have been able to position ourselves to be able to embrace this crypto community and everything that's evolving as a result of it.
Yeah, so Diego, let me ask you, Diogo. I made that mistake, pardon me. He gets very, very skittish when I call him Diego. Diego.
I've made my personal mission in life to buy San Diego, rename it to San Diego, and see what they have,
Yes.
what I have to suffer.
So Diogo, tell me about the reaction when you got your actual traditional banking license. I mean, how did the traditional banks react?
It was a validation for them that it was effectively an authorization for them to actually do business in crypto.
But they didn't feel threatened? They didn't think, oh, well, you're
No,
coming
absolutely
into
not.
our
Let
space?
me point out that Anchorage does not take deposits. We do not take fiat. We are exclusively working in crypto. And yes, we have the same exact charter that they have, and so we are regulated by the OCC, and we were the first ones to do so, but we are an extension of their business. And in fact, we partner with traditional banks for the actual fiat side of the leg, and we help them extend their businesses onto crypto. And to the prior comment, it's interesting to think if you're a traditional financial big bank CEO, your best game theoretical move is be outwardly skeptic so you don't attract undue attention, but internally they're saying go, go, go.
Yeah.
And so there's not one thing that they're building. There's multiple things. Their corporates are interested, corporate treasury. They have their ultra high net worth teams very interested because of the client demand. They have their capital markets team very interested in crypto companies. They're very interested on their prime businesses, on these lending businesses that obviously are very high revenue generation. So there's a lot of things that are happening that are not stopping in teams that are very excited, and that doesn't necessarily reflect with the excitement on the outside. But for us, we've been able to enable them to come into the space with the same charter that they have right now. And so that allows them to build products with confidence and obviously use the technological sophistication of our platform. So you have the best of both worlds. You have the best technology and the best regulatory clarity.
So flip that around then, because you know a lot of these banks are trying to get into custody as well. Do you feel threatened if a JP Morgan does the same thing or tries?
These are all partnerships. There's very few of them that actually, well, many of them have tried to actually build these internally, and the majority of them, let's say, have actually pivoted very quickly to partnering once they realize the complexity of the task that they've actually set themselves out to do. These are extremely, extremely complex products that are all cybersecurity related. These keys make transactions that are completely irrecoverable, and that's just not something that the banks are used to doing. And so all of these things that are happening with technological partnerships or sub-custody relationships. If you think about a traditional bank, they don't know how to actually custody gold. They have sub-custodians that have armed guards and armored trucks and have the vaults, and they subcontract this to the experts. The same thing is happening in crypto. They are subcontracting this to the experts.
Yeah, well, speaking of experts, let's talk to Michael about regulation, because you trade, what, 100 billion each year, lend out 14 billion. Do you feel that DC gets it?
So I think the regulators have a fairly strong understanding of the asset class. Policymakers and the lawmakers, not so much. And so...
Any people in particular?
You trying to get me in
You
trouble?
specific?
As an SEC and FINRA registered broker, it's probably not in my best interest to name certain people. But like at the same time, I think the challenges of certainly working within the confines of the U.S., for instance, is kind of the turf war that's kind of happening right between the CFTC and the SEC as to who ultimately runs crypto. But at the same time, the lack of that federal regulator today puts the onus on us to kind of follow state by state guidelines, which is actually a complete nightmare, right? To kind of keep track of which state is doing what and whatnot. And so in a way, there is a part of me, and I may regret saying this later, but like wishing for that one federal regulator where we just kind of follow one set of standards, and then all the state by state stuff can hopefully like sort themselves out. But in the meantime, it's a gray area, right, of trying to figure out what the right thing to do all the time is. And oftentimes, I think we find ourselves trying to apply existing rules of other asset classes, and it's like, how do we apply this to crypto? But it's a guessing game, right? It's our best effort to guess at interpreting rules that apply in other asset classes to crypto, and that's always hard. Like, it's not that easy to determine whether XYZ coin is a security. And so I think things like that, I think getting more simplification and guidelines around it will make our lives a whole lot easier.
Yeah, because we were discussing this last night about whether or not an NFT is considered a security, right?
Absolutely.
You trade it, it has value, and especially financial gain. That sounds like a security to most people, don't you think?
If there's like an interest or dividend paying component to an NFT, yes, it acts a lot more like a security. And sometimes it's like how many different people own it, right? Fractional ownership, I think, kind of throws the NFT certainly into the securities category. And so, but different jurisdictions and different governments have a different view on what a security actually constitutes. Some governments, I think, are saying, hey, this acts like this, so let's regulate it like something we already do, versus, say here in the Bahamas is kind of regulating digital assets as a brand new asset class separately, which I think is certainly kind of the right approach here as we think about what the right regulatory framework looks like.
Yeah, so I asked Michael because you also lend against NFT ownership as well. So you give out a generous 8% yield, I believe, or something like that, which is pretty good in this environment, I have to say.
Yeah, look, the NFT lending, I think, is our attempt, I think, to kind of venture into the NFT space. Art financing exists in traditional markets.
Yeah.
People get loans against their kind of Picassos and Warhols and things like that. I think, and so we're trying to figure out what are the future, what are kind of the blue chip NFTs kind of going forward, and starting to lend at lower LTVs against it as we kind of experiment what the market
let's not
looks
get
like.
into acronyms. So you lose people if you do that. But so Charles, I wanted to talk to you about stablecoins because that's also part of the theme of this panel and this discussion. But regulators, you've heard Janet Yellen. I think you've even heard Jerome Powell talk about stablecoins and their concerns about what this means as a systemic risk to the financial system here in the U.S.
Yeah, I mean, it's a big topic. I think stablecoins are a name that are really misused in many cases. So,
do you think we need to explain what stablecoins are? To the
I think it's helpful to describe it.
But
yeah, I mean, I think the issue is, you can tokenize an asset and put it on a blockchain. And you can tokenize a piece of art, you can tokenize a bar of gold, you can tokenize a T-bill, you can tokenize a commercial loan, and you can put it on there. Though, obviously, if you tokenize all those things, they're different. They're not all stablecoins. And so if you're going to tokenize the US dollar, well, what is a US dollar that's like the dollar that's in your pocket? Well, the closest thing you get to that is a T-bill. It matures in 3 months. There's no risk. There's no interest rate risk. It doesn't fluctuate in value. You're going to get your money. Say it's in 1 month. So you have a 1-month T-bill. That's a US dollar like what's in your pocket. It's like an FDIC-insured bank account. That is what a stablecoin is. Everything else is some kind of liability. You put a 30-year bond in there, it fluctuates in price. You don't know what you're going to, if you had to sell it, you don't know if you're going to be able to get back the dollar that you put in. And so, of course, there are all kinds of different ways of trying to represent a dollar, but that's not the same thing as it being a dollar itself that was tokenized. I think that's like maybe what gets lost in this. And so if you just had T-bills, 1 month, it's going to mature, I don't think there's a lot of risk to that in the financial system. There's operational risk. Can you run this thing correctly? But there's not real credit risk or interest rate risk. The government's not going to fail. It might have inflation, but that's a different thing. Right? And so that's a different issue. But nonetheless, I just think, you start to get into an issue where you might tokenize deposits. You have commercial loans and you've tokenized them and said they're worth $1. That, they might be worth $1, but they might not. That's why you have banking regulators. That's different from tokenizing a T-bill.
Okay, I'm going to take the counter argument, and the panel can come back at me with this, but I'll argue on the side of the regulators, because I'm sure we've all read the stories about Tether and whether or not they're backed dollar for dollar. People would bring up Terra as well. If you're buying Bitcoin to back the actual value of the stable coin, I mean, Bitcoin's pretty volatile, as we know. And then there are some stable coins out there that are purely backed by algorithms. I mean, that would be concerning from a traditional, I guess, Washington, D.C. perspective.
Well, maybe I'll jump in. Look, I don't envy the job of the regulators, and I have a lot of empathy. The space moves so fast that it's very hard for you to actually have these policies that apply to everybody evenly. Well, the reality is that not all stablecoins are the same, as you're pointing out, and many of them have different characteristics. But as Charles has said, it's actually very possible to build something that does not present systemic risk. And in fact, I'll turn it around and say, I think we run a bigger risk of not taking advantage of the accidental expansion of the dominance of the US dollar that we've created. All of DeFi, 98% plus, is stable coins that are backed by dollars or track the dollar. And we have a real opportunity to extend the dominance of the US dollar, and we should take advantage of it. Obviously having regulated stable coins, obviously having and condoning stable coins that are operating the right way, and making sure that it's clear to the industry which ones are which. That needs to be done, and not all the stable coins are the same. So we can't put them all in the same bucket, of course.
Right.
Oh, I'll take the slight counter argument to Diogo. So you're absolutely right about the dollarization of whatnot. But it used to be that you had to have a US dollar bank account to be accessed to US dollar, right? And that was one way for the Fed to control monetary policy and supply and who owns what. Now, a farmer in India, if he has an Ethereum address, can hold US dollars, right? And that's applicable everywhere in the world. Yes, you're right that I think the proliferation of the US dollar, I think, is certainly one aspect. But is that good if you're the Indian central bank, right? Where you're already worried about inflation rates and whatnot, kind of value of your own currency. If anybody can have access to the US dollar, what does that actually mean for central banks kind of around the world? And are they likely to crack down on the US dollar stable coins because they see that as a threat to their own currency, right? So that's where my head goes.
This is absolutely a very US-centric view of the world, but we are also talking about 50% plus of the market in crypto is in the United States, and the majority of the regulators that the world actually follows in terms of standardization regulation are those regulators. And those specific regulators in the United States have this opportunity, which I agree, other central banks don't have. But there's a little bit of an interesting take there, which is those regulators have also been the ones that we engage on a more regular basis that we're requesting clarity from.
Okay,
Maybe the one thing I would add is I think people want the US dollar. You go to Latin America, you go to Asia, the reason why dollars are tokenized, people want US dollars. They can't get a US dollar bank account. But now the problem is if you really constrict innovation, we're not going to necessarily be able to create that dollar that people want. Money is a product. The dollar is a product. The dollar in your pocket is a certain type of money. It's a distribution. Going through banks is a certain type of distribution. Going through a stablecoin is a certain type of distribution. And it's actually far more ecumenical to have a tokenized dollar that anyone can hold in any country in the world. And if the US dollar doesn't do it and someone else does, that's going to be a real issue. It's going to be a real problem. I think it's a problem for freedom. It's a problem for our country. And I also think it would even be a problem for the space. So if you don't construct that dollar correctly, you have it backed by something that isn't really worth a dollar. Maybe it's just an algorithm. And people don't realize what they have. You could have a real issue. The disclosures are crucial. People have to know what they have. So you call something a dollar and it's a stable coin, it's not, and it starts to be used globally, you're going to have a problem. And so that's really the position that we've taken. We have a regulated dollar stablecoin, the only one that exists, where you have a primary regulator over it. And by having those right type of protections, you can really then create mainstream adoption. That's what we're trying to do here, not just be for an early adopter community, but how are you going to affect everybody's life? That's how you can affect everyone's lives. Anyone can get a dollar anywhere in the world, and it's trustworthy. That's awesome.
Odetta, your perspective from the Bahamian side?
Yeah, I think that Mike makes a good case, right? So while my friend here, Diogo, your views are quite U.S.-centric, but I do think that we have to look at the rest of the world and the impact that stablecoin can have on the rest of the world. I mean, we have countries from Mexico to Turkey looking at how to integrate stablecoin into their economies, right? So I appreciate your perspective, but I also think that there's another world out there that maybe we'll be able to build a use case for.
Yeah, use cases for stablecoin.
Absolutely.
But it sounds like you guys are all saying that there should be some sort of ground rules. Somebody should set some sort of ground rules, and then we can all work from there. Right? That's what I heard from you, Charles.
That's right. And by the way, everybody can benefit from this. So yes, it's US-centric from the point of view of regulation, but it's not US-centric from the point of view of use. I think, in fact, many South American countries, African countries could very, very benefit heavily from having access to these types of international currencies, because they might have issues. There's issues of hyperinflation. There's issues of seizure. There are issues of freezing assets. So this is actually, it's a global phenomenon, and DeFi is available to everyone, and these stablecoins are available to everyone. I just think that we do have an opportunity in the US to lead, and we have an advantage by being the first ones to do so. And I am very welcome to EU regulator to do the same with Euro, right? I'm actually Portuguese. I grew up in Portugal. So even though I have a US-centric view, I feel like they're the ones that actually have the capabilities of doing this the best. But I would also welcome a Euro version of this that has clean regulation, that has that implements and integrates with all of these different ecosystems. That would be beneficial too.
Okay. Do you go ahead? Did you have something?
No, I was just going to say, I feel like we're in a little bit of a purgatory, right? Because there is a call for, there is a call for greater, like we're in a holding space right now, right? Where there's a call for greater regulatory clarity as it relates to stablecoin. I think it's coming. And I do believe that, regulators are just trying to wrap their minds around stablecoin and grapple with how to create that framework that stablecoin can exist in.
Yeah. Now, can I ask do you think if a digital dollar is introduced in the next 3 to 5 years, do you think that changes the picture at all, Charles?
I think if it's constructed correctly, it could change the picture. On the other hand, the government tends to not be great at innovation. It tends to work with the private sector, right? I mean, it's very hard to innovate. If you think about even stablecoins at this stage, it is so early. The product market fit seems like it's there because we have early adopter community using it. But could you really have it scale on a societal-wide basis the way it's constructed right now? I don't think so. There's features around privacy and anonymity that still haven't been worked out. How do you get the technology to work at a payment system level? That's still not there. So I'm not sure that we're in a position where a central bank could just go and issue this. There's so many policy implications. And so I understand why they would want to move slowly. But really, they should allow the private sector to innovate and see what works. And that can lay the real foundation, I think, for deciding what should be done at a much larger scale and on a government backing it. I think it's very hard to look at examples of government technology programs, in a recent period that have really shown themselves to be effective at this type of change.
Mm-hmm. Okay.
And I would say that there's maybe 3 characteristics that are extremely important, and some of them are just not natural for a government to actually allow. Obviously, we have the transparency, which we could have something that comes out that is transparent. We have the programmability. Let's assume for a minute that a government-backed solution has those aspects, but then you have the permissionlessness aspect of it, which is the one that candidly created the most innovation in crypto, is the fact that anybody can just program anything. And like Michael was saying, anybody in India can actually just download an application and now take $1. That's incredible. And the permissionlessness is something that it's just very hard to see historically, a government just allowing anybody to have access to their core portions of the financial system. It's like everybody now has access to FedWire today, and that's something that might be uncomfortable.
No, Michael, I want to ask you, since we're down to our last few minutes here, but I just wanted to ask you, do you think the traditional banking system, Wall Street, is ready to let go? Because obviously they spend a lot of lobbying dollars to make sure maybe cryptocurrency is handcuffed.
So I was looking at actually our settlement statistics the other day. We said, okay, we've been in crypto now for almost 10 years. And stablecoins has certainly gotten a lot of traction in the last few years. If you look at all of our trades and our loan volumes, how much of the US dollar settlement is still done via the FedWire? And how much is now done by stablecoins, right? And it's funny, it's still 70-30 FedWires, as opposed to stablecoins as kind of the primary method of issuance. And the crypto native guys are the 30%, right? Yes. They're the guys settling USDC and whatnot kind of all day long. It is the traditional large institutional players that is still sending the FedWire. Right? And so the legacy systems and the old way of doing things, as we broaden the pipes to include the traditional asset managers and the biggest banks, are very much used to kind of sending the FedWire. So it's not going to go away simply because that's kind of the modus operandi, right? That's kind of what they do to run their ordinary course of business. As it relates to, what will they be, block innovation? How they ultimately feel about it? Tough luck. Like, you kind of have to, right? Like, it's one of these things where you either...
But they can throw dollars at it. Maybe they're not willing to let go yet.
I don't think so, given the amount of interest and activity that I think we're all seeing from kind of the banks that are creating products and services and hiring like hundreds and of people into various crypto activities. I think, that's why part of my rationale about never being more bullish on the asset class kind of comes from the fact that we're now kind of getting the support of the banks. Yeah. And frankly, we got to $2 trillion without a single bank really doing anything, right? But like for me, to go from 2 trillion to 100 trillion and beyond is kind of where I think the traditional banks will really play.
Okay. Well, Charles, let me ask you, just using a baseball terminology, Odetta, should I use a cricket terminology here in the Bahamas then?
You can use baseball.
Okay, I'll use baseball then. But just in terms of innings, and you can even say we're in batting practice, but where are we in innovation for cryptocurrency? Batting practice or ninth innings? Obviously not ninth, but.
I think the game started, but maybe only the first pitch of the first out of the first inning. I mean, really, it's very early. And this is the way I would dimension that. So there's, say, $2 trillion of crypto assets. There's $700 trillion of assets in the world. And of those 700 trillion of traditional assets, what % have been tokenized? It's basically zero. It rounds to zero. It's maybe 150 billion. So really nothing. So you're, by definition, at the very beginning of this. And one of the things that, as an infrastructure provider, we talk to banks and brokers, traditional companies, as well as fintechs and others. And my pitch to them is always the same, which is you have all the customers. You have all the businesses. They're already using you. They might want something different now. And so you need to adapt to that, but it's your position to lose. And so you shouldn't be afraid of this. What you should be afraid of is continuing to use the old infrastructure, the old pipes, the old ways of moving assets around that are creating lags and not allowing there to be products that meet people where they're at. If you just closed your eyes for 1 second and imagined a financial system based on the technology we have today, the fact that you have an iPhone, and you just closed your eyes and thought about what it looked like, would it look anything like what we have now? It's almost implausible. It's completely crazy. Settling stocks in 2 days, money takes 5 days to move around.
Yeah.
It's absurd. The whole thing doesn't even, it's illogical. And I think everyone is starting to recognize that as people are coming up and growing up and having iPhones and getting everything immediately, and then having a financial system that's not meeting this new economy where it is at, which is moving at the speed of the internet, that there has to be big changes. How to do it, what's the right way, how do you keep the right controls in place, those are all worth talking about. But the idea that you're not going to have a radically different financial system is just, I just couldn't imagine it, because we're going to have a radically different economy. And the point of a financial system is to help the economy. The whole point of the economy is not to help the financial system. So what does the financial system have to do to change? A lot.
Yeah.
And I think they know that, but they're incentivized to change it too. They want to keep their customers. Once you start losing customers, you really get your mind focused, and that's what's happening now.
Okay.
I would also build on that and say that companies like Square and with Square Cash have actually demonstrated to the traditional players a couple of things. Number one, it's a profitable business for them to be in, which they're obviously motivated by.
Yeah.
Number two, at least a few months ago.
Too, right?
Yeah.
I mean, that counts for
That's
a
right.
lot.
The multiple that these companies with a coherent strategy in crypto were getting were higher. But number three, and the most interesting one, is whenever you add crypto to your traditional consumer business, these players realize that they have 10 times the engagement. And 10 times engagement, well, part of it because maybe volatility is the feature. Since you open the application every day to actually check on prices, you end up engaging with the rest of the products that you have on a consumer app. And so every time somebody adds crypto to their consumer products, they see a lot more engagement on across the board all their other products. And so that is the feature that they want. They want more engagement. So that has been a fascinating one that has been driving a lot of our clients to participate in this ecosystem.
Yeah.
is the engagement.
Okay, final thoughts. We have 2 minutes left. Michael, where are we in the evolution?
I feel like, take Bitcoin for instance. Is it
Sure.
a risk asset or is it a store of value, right? That's kind of the two polars of, you can't have it be both. And so it's like, which one is it? And I feel like we're in this world where the speculative stuff is starting to transition ultimately to the store of value. And whatever the final price of Bitcoin is, and whether 𝗏𝗔𝗟𝗧 thinks it's $500,000 and Cathie Wood thinks it's $1 million, whatever the actual number is here, as we get to that final number, we're going to transition, right? A lot more from the risk asset to the store of value, and we're in that transition. Every time you see these huge drops in volatility, it's kind of those guys, the traders, the speculators, selling to the hodlers that will never sell, right? And so over time, I expect the float of Bitcoin to actually decrease on the exchanges. More and more people just will buy and will never actually sell. And I think that market dynamic, we'll actually see that, so that like when the next bull market ultimately comes, you'll see a lot less liquidity actually on the exchanges in terms of number of coins. And I think that'll be a huge driver in the next bull market.
Great, and I think it's appropriate to get our final thoughts from our host here in the Bahamas, Odetta from Deltec. And last night, I was at a dinner with your wonderful Bahamian securities regulator. I think everyone was employing her.
She's in the front row?
Yes, there you are. She is amazing.
Yeah.
And she's the reason why FTX is here. And I think a lot of people were imploring her and more Bahamian officials to go to DC and maybe talk to the regulators there and to give them a sense of how to actually operate in cryptocurrency.
Yeah. No, like I said, our regulators have been very forward-thinking and very progressive, and I think that that's exactly why we're here at Crypto Bahamas today. It's because of our great regulators like Christina Roll.
Yeah.
So hats off to the Securities Commission of the Bahamas. I think that we're at the tip of innovation, right? And I just hope things keep evolving. Crypto innovation, banking innovation, and I believe that the Bahamas is really well positioned. I'm really happy that you guys are all here to experience what FTX is building and what the Bahamas is building as it relates to being the hub for innovation.
And thank you so much. Thank you, Bahamas, and thank you so much for having us today.
Thank you.